Imagine this. It's 2030. You're at your local market. No fumbling for change, no physical wallet. You scan your fingerprint or tap your phone. Even the street vendor selling fresh produce takes digital payments. Welcome to the cashless society, a world where your physical wallet might be a relic. This evolution isn't a distant dream. It's a rapidly unfolding reality. We've seen how technology reshapes our lives from communication to entertainment. But what about money itself? Many nations are already moving aggressively towards eliminating cash. For younger generations, it's not a trend, it's already their reality. The speed of this transformation is striking. In countries like Sweden, less than 10% of transactions now involve cash, with only 8% of the population using cash in 2022, and the amount of physical kroner in circulation has shrunk by half since 2007, according to the Sveriges Riksbank. Meanwhile, China's mobile payment volume dwarfs traditional card payments, reaching over $83 trillion in 2021 and $74 trillion in 2023. The global mobile payments market, valued at approximately $1.3 trillion in 2022, is projected to surpass 3 billion users by 2024 and reach 4.4 billion users worldwide by 2025. Mobile payment solutions are expected to account for nearly 50% of all digital payments by 2025 and are projected to overtake cash transactions globally by 2026, with a market share exceeding 60%. Is this the future we're all heading towards, and what does it mean for your money? If your phone is already your wallet, hit like. If you're curious about a future without cash, hit subscribe, and let's unravel the financial revolution. Mobile payments, the new default. First up, let's talk about the everyday revolution: mobile payments. This isn't just about convenience. It's about the fundamental dominance of digital wallets, QR codes, and contactless payments, rendering physical cash and traditional cards increasingly obsolete. Right now in 2024 to 2025, we're seeing clear signals of this shift. Gen Z, the true digital natives, inherently prefer mobile payments. A striking 64% of Gen Z and Millennials indicate they will take their business elsewhere if in-app payments are not an option, and 85% of Gen Z consumers specifically prefer digital wallets like Apple Pay or Google Pay. Millennials are rapidly catching up, with 20% of younger millennials already using mobile wallets daily. The global mobile payments market, valued at approximately $1.3 trillion in 2022, is projected to surpass 3 billion users by 2024 and reach 4.4 billion users worldwide by 2025. These statistics paint a picture of an accelerating, irreversible trend. Imagine a world where every transaction, from that morning coffee to your monthly rent, is effortlessly completed with a tap, a scan, or even a glance. By 2030, the satisfying ping of a successful digital transfer will replace the rustle of bills. For Gen Z, this is simply the natural evolution, a seamless, invisible flow of funds that aligns with their always-on, digitally interconnected lives. For millennials who have navigated the transition from physical cards to digital wallets, it's a gradual, logical adaptation. The psychological shift here is profound. Money becomes less a tangible object and more an abstract data point. You're not handing over anything. You're merely authorizing a transfer. The benefits are undeniable: unparalleled convenience, lightning-fast transactions, and a significant reduction in cash-related crime. But there's a critical flip side. This ease of use can lead to what researchers call spendception, a reduced psychological resistance to spending because the transaction feels less real. When physical cash is used, the act of handing over the money provides a tangible reminder of the funds leaving one's hand, creating a pain of paying that acts as a natural barrier to overspending. Digital transactions lacking this tactile feedback weaken that mental link, making impulse buying easier. This raises concerns about increased debt and a diminishing sense of financial awareness. For instance, the popularity of buy now pay later BNPL services among Gen Z and Millennials, with over 40% adoption in 2024, is accompanied by concerning trends. Over 30% of these users have lost track of payments, and over 50% regret using BNPL after understanding the total costs. This illustrates how the seamlessness and invisibility of digital transactions can contribute to a psychological detachment from spending, making it easier to overspend or lose track of financial obligations. When was the last time you held a $5 bill? What does that feel like compared to a digital tap? digital banks and fintech banking without branches. Next, let's explore how the very institutions holding your money are transforming. We're talking about the meteoric rise of neobanks, online-only financial institutions, and sophisticated fintech apps that are fundamentally redefining traditional banking. The explosion of fintech apps for budgeting, investing, and instant payments is undeniable. The global neobanking market was valued at USD 143.29 billion in 2024 and is projected to grow to USD 210.16 billion in 2025, with some projections even higher at $230.55 billion. This is not just about new applications, it is about a fundamental shift in how people interact with their money. 3/4 of Gen Z, 74%, and Millennials, 77%, believe generative AI will impact how they work within the next year, indicating their openness to AI-driven solutions. Furthermore, 55% of consumers expect to increase their usage of in-app payments this year, demonstrating a clear appetite for digital-first financial experiences. By 2030, physical bank branches could indeed be a rarity, perhaps transforming into advisory hubs rather than transaction centers. Your entire financial management will likely be app-based, seamlessly integrated into your daily digital life. Imagine AI not just offering personalized advice, but actively automating your savings, identifying spending patterns, and even negotiating bills on your behalf. Apps like Capital or Digit already use AI to analyze spending habits and automatically move money to savings when one can afford it, or based on personalized rules like saving every time one skips coffee. This digital-first approach offers immense benefits: greater accessibility, often lower fees, and faster, more efficient services. AI-powered tools can enhance financial literacy by providing real-time insights and personalized guidance. However, there is a subtle but significant risk: the gamification of money. Financial applications are increasingly incorporating game-like elements, points, badges, streaks, and challenges to make saving and investing fun. While this can boost engagement and retention of financial concepts, it also risks turning serious financial decisions into a game, potentially encouraging impulsivity or reckless behavior. The line between education and manipulation can blur, potentially eroding sound financial principles in favor of dopamine hits. One Gen Zer proudly signed up for 3 different banking apps for perks, only to forget half their PINs, highlighting the paradox of digital convenience. Do you still carry physical cash, or has your wallet gone full digital? What's your biggest concern about a cashless future? Privacy, accessibility, or overspending? Drop your thoughts or in the comments below. Cryptocurrency and decentralization, a parallel economy. Now, let's venture into the more speculative yet increasingly influential realm of cryptocurrency and decentralized finance, or DeFi. Will these digital assets offer a parallel economy, challenging the very foundations of traditional banking in our cashless future? Once a niche investment, cryptocurrency is slowly but surely emerging as an alternative payment method. As of 2025, around 8–10% of the global adult population owns some form of cryptocurrency, a significant jump from 1–2% in 2018. This adoption is notably higher among younger demographics, with 52% of millennials and 48% of Gen Z reporting owning or having previously owned crypto. Stablecoins designed to maintain a steady value pegged to fiat currencies like the USD are emerging as a potential bridge, offering the benefits of crypto without the extreme volatility. By 2030, will crypto move beyond speculative investment into everyday transactions? Stablecoins could certainly facilitate this, enabling seamless, near-instant payments for everything from groceries to digital subscriptions. The dream for many is financial freedom. Borderless transactions, censorship resistance, and financial inclusion for the unbanked, bypassing traditional intermediaries. However, the reality of this parallel economy is fraught with significant risks. The extreme volatility of cryptocurrencies like Bitcoin and Ethereum means their value can plummet overnight, as tragically demonstrated by the Terra Luna collapse in May 2022, which wiped out over $50 billion in market capitalization and caused over $400 billion in broader crypto market losses. The FTX exchange collapse in November 2022, caused by a liquidity hole and mismanagement, further highlighted the systemic risks and lack of consumer protection in unregulated crypto spaces. Beyond volatility, the crypto space is rife with scams, AI-generated deepfake giveaways, pig butchering romance scams, and rug pulls where developers disappear with investor funds. Losses from rug pulls alone reached nearly $6 billion in early 2025. Consider the stark contrast between a Bitcoin-rich teen in 2021, celebrating overnight gains, and a Luna collapse victim, who lost their life savings, illustrating the high stakes involved. The cashless divide and data trail, who gets left behind. Finally, as we hurtle towards a cashless 2030, we must confront the uncomfortable truth: this transformation is not equitable. It creates a cashless divide, leaving vulnerable populations behind, and every digital transaction leaves an indelible data trail with profound privacy implications. Even today in 2024-2025, vulnerable populations are struggling. The elderly, low-income communities and the unbanked often lack access to smartphones, reliable internet, or traditional banking services. In the US, 5.6 million households are unbanked and 19 million are underbanked. Many unbanked individuals, 66%, still conduct all their financial transactions using cash. For them, cash is a lifeline, offering a sense of control and privacy, especially for domestic abuse victims who secretly build up cash to escape. Digital literacy gaps are a significant barrier. For example, 53% of people offline cannot afford the average monthly broadband bill, and over a quarter of young people lack laptop access. Meanwhile, every digital transaction, from a coffee purchase to a subscription payment, leaves a permanent traceable record. This pervasive data tracking is already a major concern, with studies showing that the average American's data is tracked and disclosed 747 times per day by the targeted advertising market alone. What happens when cash is no longer an option, when businesses universally display card-only signs? The challenges for those without smartphones, bank accounts, or digital literacy will become insurmountable. Imagine an elderly person unable to buy groceries or a homeless individual unable to receive donations. The cashless society risks exacerbating existing income inequalities, making financial inclusion a central policy challenge. Every digital transaction by 2030 will contribute to an even more comprehensive, permanent, and traceable record of your life. This impacts not just privacy, but also potential surveillance by governments and corporations, raising concerns about misuse of power, loss of anonymity, and data breaches. While increased efficiency for businesses and targeted services are clear benefits, the profound privacy concerns are paramount. Every digital transaction leaves a trail that can be aggregated, analyzed, and potentially exploited. This raises questions about who owns your financial data, how it's used, and the potential for financial surveillance or discrimination. The IMF highlights that pervasive profiling and targeted misinformation campaigns are potential new risks. This shift demands robust legal frameworks and ethical principles to protect individuals' rights and ensure a just digital environment. Picture a Gen Zer taking their grandma, a baby boomer, shopping. Grandma pulls out cash only for the cashier to say, "Sorry, we don't accept cash anymore." A small moment highlighting a huge generational gap and the pace of change. Conclusion and recap. So, as we look towards 2030, the cashless revolution is multifaceted. We've explored the undeniable rise of mobile payments as the new default, the transformative power of digital banks and fintech reshaping financial services, the intriguing yet volatile potential of cryptocurrency and decentralization, and the critical concerns around the cashless divide and data trail. While physical cash may not entirely vanish from every corner of the globe by 2030, the financial habits and the very wallet of Gen Z and increasingly millennials will be fundamentally different from previous generations. Your phone, your fingerprint, your digital identity, these are becoming your primary financial tools. The future of money is not just about how we pay, but how we live, save, and manage our entire financial lives. Gen Z's financial revolution is just beginning, and your fingerprint might be your new wallet. Preparing for this means embracing digital literacy and critical financial thinking, understanding both the immense opportunities and the inherent risks. Do you still carry cash daily? Tell us in the comments. Liked this deep dive into the cashless revolution? Hit like, subscribe, and tag a friend who needs to understand the real stakes of digital money. And tell us what's the next financial frontier you want us to explore.